Welcome to Markets Now. I'm Michelle Rook with Allison Thompson of the Money Farm. And just about everything higher except for the wheat market on Thursday. And Allison, let's talk about corn and soybeans. We basically have been trading a lot of inside days here heading into the report coming up tomorrow. What do you think's programmed in already?
Well, just from the lows that we had early this fall, the market has been pricing in on corn. We've been pricing in some strong demand. We know exports have been running very well. Ethanol production has been turning around very well as well. But one thing that the market maybe isn't so cognizant of is this is what production is. We've been looking at a big yield, obviously, but we also know it was pretty dry finish for corn as well. So depending on how that actually impacts the final production number remains to be seen tomorrow. But ultimately, we've been trading some really good demand in corn, and that's got us $1 off the lows pretty much. So if we're going to see a move higher tomorrow, we need to see a surprise or really good numbers on both production and demand. Now, soybeans, on the other hand, completely different story. We're not seeing as strong of demand in there, but we're still dealing with what they're thinking is a big crop. And I think that could be argued. A lot of the crop, especially up in my neck of the woods and guys I've talked to, were happy with APHs this year, and there were a lot below too. And again, another dry finish. So how much of that accounted for yield? That could be a surprise in the report, especially with estimates being very tight. It just leaves more room for a surprise element. And the same could be said for demand too on the soybean side. We've had good exports. We know they're running ahead, but we've also had good crush too. So I think those are things we need to be watching as well.
The smaller crop that we saw, especially because it was so dry for those soybeans coming out of the field, that's going to show up in the quarterly stocks report, isn't it, if it happened?
Yes, I believe so. The quarterly stocks is a unique report because in some ways it almost seems like it works backwards. So it takes the final production numbers that the USDA drives and then calculates what stocks were on December 1st. So anything that happened or disappearance that happened between those two numbers is where we're getting our demand from. So we could see that shift around to different areas. Obviously, we're talking exports, we're talking domestic usage, so that crush, ethanol use. But another thing I want to talk about also for wheat even is what feed demand does. Arguably, we've seen prices, near 4-year lows or relatively cheap for this quarter of the year. So if they are going to be adjusting demand, we actually could see increased feed usage come into play for both corn and wheat.
Yeah, and wheat, we're going to get winter wheat seedings, but we pretty much know what that's going to be already. That's going to be kind of a non-event.
Yeah, wheat overall is looking like an uneventful report. We're not seeing any large changes in seedings this year. We're not going to see any, they're not expecting any large production changes that way. And also on the world side too, it doesn't seem like the USDA is going to make any adjustments here. The Northern Hemisphere, the crops in dormancy, we're going to see the 9 lives of winter wheat come into play during the winter, but the USDA doesn't really adjust for that until we get into out of dormancy and see what the crop actually looks like. So for now, I'm not expecting any big changes, even in Russia. And we're also entering harvest in the Southern Hemisphere. So we're not quite there yet for getting any adjustments, whether that be higher or lower, particularly for Argentina or even Australia.
Right. After the report is done, then the focus starts shifting to South American weather. And of course, Argentina, that's what we've been watching here in terms of the impact of, especially on the meal market.
Yeah, those byproduct markets are going to be very important with this weather system. But we've seen that kind of start to falter a bit. And I think guys need to be aware of that. Obviously, the headlines here do support soybeans and they support corn, but Argentina is a big byproduct market for soybeans. Both soy oil and soy meal, they're the world's #1 exporter of. And in years of short crops, they're known to import a lot of their needs from Brazil. And right now, when you're looking at Brazil, they're looking at this large crop and they're going to have more than enough to supply Argentina's needs for any shortfall that they have. So on the byproduct side, we're not seeing any hiccups as far as production goes or looking at shortened supplies at this point. So that could definitely be something that puts a resistance to soybeans rallying any further based on weather alone.
The other big key going forward after the report is going to be what the funds want to do. And we've had difficulty getting above some of these technical resistance areas on the charts. And we need a push, don't we?
Yes, we absolutely do. Corns, obviously, they've turned long. They've been good buyers, but if they're going to continue that and push higher, we do need a supportive report. They need a reason to keep buying. And even on the soybean side, the funds have definitely, decreased their short position substantially. It's over half that they've upped it. So we're actually closer to neutral now than we are when we were at the record lows earlier in 2024. So going forward here, if we're going to see them get to a neutral position, we need somewhat of a supportive report tomorrow. If not, and it ends up being bearish, it just gives them another reason to go short. And wheat, same thing. We've also seen them start to decrease their short positions, but they do still remain short. So if they're going to be changing here or need some incentive to go long or at least get closer to neutral, they're going to need a supportive report. I will say one thing though, in looking at wheat and the fund position is that MATA futures or Paris milling wheat, Euronext, they've actually seen substantial liquidation off those short positions just in the last week. So something is turning there, and hopefully there's something happening there, whether there's concern about Russia's export tax, if production and winter wheat look that bad, or what they're thinking for next year. It seems like there's something changing there in that market, and hopefully that's a sign that we could potentially see some buying start to come into the U.S. wheat markets as well.
The headwind, though, is still that dollar, isn't it? We're back up to near these old highs.
Yes, ultimately, wheat's definitely been pressured by the US dollar. And although we recently made new lows, I think the dollar could continue to push higher here, higher for longer rates, higher for longer dollar. So I think that is something that is going to pressure wheat here as long as that does continue. Unless we get a very friendly report, we need something that's going to outweigh the movement of the dollar. And right now, our wheat's expensive on the global market. So unless we can prove better demand or a production shortfall, this market does have the ability to trade lower here. And unfortunately, I don't like being bearish wheat, but we really need a bullish story in wheat if we are going to see this market move higher.
And lastly, let's talk about the cattle market. A nice recovery here today. And of course, yesterday we had this sell-off and there was a lot of concern that maybe we were starting to tap the market. We had some record 320 cash trade here today. So in your mind, does that market hold together here for a while yet, unless the cash market breaks?
Yeah, I have a feeling we've been so cash derived. I think that the cash is going to continue to lead this market. So until we see a break in cash, I think it's going to be really hard to see a large correction in the futures market. But technically, we did see a gap higher this morning, and gapping higher, two new highs. Obviously, you could read that any way you would like to, but it should put some warning flags out too that this could be some topping action as well. So we've had big volume here at these levels, and it just kind of makes me a bit nervous on how we're going to trade here going forward. Obviously, there's that gap. I would expect that could be filled here in the next couple of days, and then what? So I think we'll get some answers here on near-term price direction. Hopefully, if not the end of the week, early next week on which way this cattle market might be going. The next couple of weeks remain important.
Yeah, absolutely. And the gap higher that you saw in cattle, we also saw in hogs. And I wondered if some of that was tied to this port strike in the East and the Gulf Coast maybe being averted.
Yeah, that's very true. You mentioned that that's a big import-export market there for containers of frozen meat. So yes, it definitely could be. There's always moving pieces, but obviously it comes down to supply and demand, and that's one of the pieces that the market has been watching.
No doubt. All right. Thanks so much, Allison Thompson with the Money Farm. That is Markets Now.